Pretty impressive, right? Well, not as impressive as BYD. Hi guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I want to give you guys an alternative perspective about investment as well as in personal finance. Today I want to talk about why BYD is better than Tesla. Indeed, the share price of BYD went down quite a lot in the past few months. We are talking about a share price of roughly around $48. During the same period of time last 6 months, Tesla went up 16%. Yeah, not the best of all, but if you compare with BYD, which went down 29%, there's a 45% of differences just within 6 months. What actually happened? Do not forget that Warren Buffett owns 8% of BYD, which is worth roughly $7 billion. So what's the catch? I'm going to compare BYD and Tesla in 3 angles. One is from value investing perspective, the second one is about the growth story, and the last but not the least is the technical analysis regarding the timing. Let's start with value investing. If you look at value investing, Tesla's PE ratio, price to earnings ratio, is 164. The price to earnings ratio for BYD is 140. The average in the stock market, for example, S&P 500, the long-term average is around 16, but it varies a lot. So this is 10 times or even 20 times higher than the normal average. So this is extremely expensive. And we are talking about after the Ukraine crisis. Before the Ukraine crisis, BYD's PE ratio was 170 to 180. This is crazy. If you don't know what is price to earnings ratio, check out my other videos in the channel in the link above. The other metric for value investing is dividend yield. This is very important if you know Warren Buffett. He basically buys in a stock of a company and he collects the dividend for the long term. If you look at the yield for BYD is 0.09%, which means if you invest $100, you only get 9 cents per year. So it's basically peanut. But it's even worse with Tesla. It is 0%. So basically it is complete rubbish to invest in Tesla or BYD if you look at it from the value investing perspective. But of course, Warren Buffett invested in that in 2008 and the price was less than $3 compared with $48 now. So of course it makes sense for him to invest at that time. How about the growth story then? There are a number of metrics to look at. For example, price to sales ratio. The PS ratio is basically the market capitalization of the stock divided by the total sales of that company. The PS ratio of BYD is 2.9. And guess what? Tesla is 19.3, which is 6 times higher than BYD. In comparison, you can also look at XPeng, another competitor. The PS ratio is 13.7, which is also very high. And of course, this data comes from before the Ukraine crisis, or it would be heavily distorted. The other metric is, of course, the number of cars produced or sold. In 2021, BYD sold or delivered 600,000 NEVs, new energy vehicles, which include plug-in hybrid. If you don't know why, check out my videos here in the link above or in the description below. During the same period of time, Tesla delivered 936,000 cars. So Tesla is winning, right? Not really. If you look at 2022, Tesla is expected to deliver 1.4 million cars. 50% increase. Pretty impressive, right? Well, not as impressive as BYD, because BYD would go up 100% in 2022 to deliver 1.2 million cars. If you look at this trajectory, BYD is going to outperform Tesla in terms of the number of deliveries in 2023. New energy vehicles including plug-in hybrid, hydrogen fuel cell vehicles, and of course, battery electric vehicles. The next factor is arguably the most important factor, the China factor. In 2021, according to the International Energy Agency, there were 6.6 million new energy vehicles being sold worldwide. Out of that, 3.4 million vehicles were sold in China, taking up more than 51% of the market share. In comparison, the EU, European Union, and the US add together were only around 44%. So China is the biggest market for new energy vehicles. And even more amazing is that this biggest NEV market in the world is growing at breakneck speed. We are talking about the market size in 2021's $124 billion, and by 2027 it will be $799 billion, a growth of 6.4 times. BYD as a Chinese company certainly has an advantage over Tesla in the Chinese market. In 2021, they sold 600,000 NEVs. In comparison, Tesla only sold 240,000 in China. And I expect this gap would grow further in the coming years, because obviously BYD has a bigger scale in China, they have the local know-how, and more importantly, in terms of geopolitics and culture, they have an advantage over Tesla. So BYD certainly has an advantage over Tesla in the biggest NEV market in the world, which will be growing more than 6 times in the coming 7 years. Oh, is everything nice and rosy then? Well, if you look at the profit margin, the picture is slightly different. The profit margin of BYD is 2.34%, which means every $100 of revenue, you only earn $2.34. In comparison, Tesla has 11.76%, which is more than 5 times that of BYD. This is partly because BYD has a cheaper kind of range of electric vehicles at the lower end, and also the competition is very strong in China. Our technical side of things. Well, I'm not the big technical analysis guy, so I'm not going to deep dive, but it's pretty obvious if you look at the graph. Now it's around $48. The next support, or at least psychological support, stretching back to March 2021, when it was around $41. That means there's a potential that it could drop 14%, of course depending on the market sentiments and Ukraine crisis. In summary, why BYD is better than Tesla? In terms of value investments, both of them are crap. If you look at the price to earnings ratio, both of them are beyond 100 or even almost 200. It doesn't make sense at all. In terms of dividend yield, both of them almost 0% or 0%, basically no yield. So in terms of value investment, this is complete. But if you look at growth story, it's a different picture. So BYD is actually much better in terms of price to sales ratio. And in terms of deliveries, even though Tesla is delivering more in 2021, but in 2022, despite the very impressive growth of Tesla of 50%, we expect that BYD will grow 100%, and it will probably surpass Tesla in the coming 2 years. And of course, we have the China factor. BYD is a Chinese company. It would have advantage over Tesla because of its local network, local know-how, the culture, and of course also of geopolitics. They will have advantage over Tesla in the biggest NEV market in the world, which is going to grow 6 times in 7 years. Well, but don't go to buy yet. As I mentioned, technical analysis, it is very likely it will go down further. From $48, the next psychological support will be around $41 or $42. So we go down further for 10 to 14%. So don't buy it immediately now, but I would buy around $40 level and expect it to grow probably double in the coming 2 to 3 years. Of course, assuming that there's no World War III. So do you guys think BYD is better than Tesla? Leave me in comments below. If you like the video, remember like, share and subscribe. This would be very important support for me to continue making videos for you guys. Ciao.